Today's topic is going to be inflation. Inflation looks like it might be on the way, and so I'm going to answer some of the questions I've been getting about what you should be doing with your personal balance sheet in business, what you should be looking at in your investment portfolios, all that and a lot more on today's Wealth Talk. So inflation really has not been an issue for quite a long time. We've seen the Federal Reserve doing pretty much everything they can in terms of monetary policy to be able to get inflation, somewhere even close to 2%. So it's really been years and years now that we have not had an inflationary issue, which is why obviously we're seeing interest rates at record lows. Just recently, though, we're starting to see a few signs that I'm looking at that lead me to believe that while I don't think it's going to happen in the next month, 2 months, or 3 months, investors really need to start preparing themselves for the reality is that inflation could become an issue once again. So what are some of the things that we're looking at? What are some of the reasons we believe that inflation could be an issue? Well, I think the big thing is if you look at our economy since 2008, it's been really, really difficult, as I mentioned, for the Federal Reserve to engineer any type of inflation whatsoever. If you go back to your economics 101 class, if you haven't taken an economics 101 class, let me tell you in terms of two key things simplified that you really need for inflation to happen. One is you need supply. So you need supply of money, dollars to come into the economy. And we're getting that in a big way. We've been getting that in a big way since 2008 in the financial crisis in the form of the Federal Reserve continuing to print money, 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 money. But the second thing that you need for inflation to happen is you need velocity, meaning that once that money is printed, you need that money to get out into the economy, into the pockets of real consumers like you and I. And what inflation is essentially is too many dollars chasing too few goods and services. So a lot of people that follow me are realtors. You see, when you have a inventory supply, a supply issue, what happens there is you tend to see prices tick up. Obviously, especially with record low interest rates, you have a lot of people that want to buy homes, but if you don't have a lot of supply, not a lot of new homes hitting the market, that tends to increase the price. And so really it's the same concept with inflation. And so while we've had money being printed for quite a while now, we really haven't had that velocity. One thing that caught my eye though is in 2020, we've had the largest increase in money supply since we've seen since World War II, meaning actual money hitting the economy. A large part of that was due to the stimulus plan that we had. Now, what we're hearing, though, with new President-elect Biden is that there's plans to actually increase that stimulus plan. There's talks now about potential infrastructure spending. So what we're hearing is a lot of the things that fueled that increase in supply or that velocity, meaning taking that supply and putting it into the hands of consumers, may actually be ramping up this year. I was talking to a client that's a Canadian client today, and they're thinking over there, what should we be doing in terms of currency conversion? While they've really had some tailwinds due to the fact that the Canadian dollar is really traded at a discount to the US dollar, they've kept a lot of their money in US currency. Now they're starting to get a little bit concerned about that currency. And so inflation is directly tied to the dollar, is directly tied to supply and velocity. So the big question you need to ask yourself is this going to continue? Are we going to continue to see money trickle into the economy, chase after too few goods and services, and not artificially, but increase the prices, meaning that dollar that you have today, obviously, if inflation becomes a real issue, is worth a lot less tomorrow. So for example, if you're buying a gallon of milk today, that's $3.20. If inflation comes up, milk prices go up, and that goes to $4, $5 for a gallon of milk. Obviously, that dollar that you have today is going to buy you less milk. And that's essentially the narrative around inflation, is that if you're just sitting on cash that's not earning money and the price of goods and services that you're going after is increasing, you're going to put yourself in a really bad position. And so, what are some of the things that I'm looking at that maybe are validating that other large investors, institutions are concerned about inflation becoming an issue and potentially concerned about what's going on with the dollar? Well, first of all, you look at cryptocurrencies. It's kind of hard to get away from the fact that you look at currencies like Bitcoin, for example, those are starting to rally and rally very hard. Now, it's not just the average investor that's out there, you and I, that's chasing these. You're now seeing large institutions starting to use cryptocurrency as a hedge, in some cases, a replacement of gold against inflation. So now you're seeing people starting to say, hey, inflation could be an issue. I'm quite a bit worried about the dollar. What are some of the things that we can do to be able to offset that? So cryptocurrencies are one thing. The other thing, what I'm really starting to see now is also international stocks, Asian stocks in particular, for the last few weeks have continued to rally. You're seeing the currency rally against the dollar. What you're looking at in places like China, for example, is they came out of the pandemic a lot sooner than us. Their economy, for a large part, is open again. They're starting to hit on all cylinders. So that's an economy that's competing with us that's actually doing better. So as that economy does better, their currency starts to do better. So people are now saying, well, maybe instead of being just in the US and being tied to that dollar, I want to have some investments in international companies where maybe I'm going to have better performance because these are economies that are doing better. But importantly, it's showing some concern over the dollar to where, hey, maybe I want some of those revenue share streams that I'm invested in to be international revenue streams. So you're seeing those international assets now start in the short run outperform US assets. Another thing that I'm looking at is some of the commodity stocks, a name that I've been talking about for those of you that have followed me now for a few months, and I've really been beating the drum for the last month on it, is Chevron. And so Chevron obviously is an oil company. A couple things: it pays a good dividend that people are interested in, especially with a 1% 10-year treasury, but also it's a tangible asset. So the price of oil is very strictly tied to the dollar. So traditionally, as the dollar increases, you see oil prices go down. But if the dollar is under pressure, inflation becomes an issue, you're going to see oil prices tick up. So you're seeing commodity stocks for the first time in a very long time catch a bid. So now we've got assets like cryptocurrencies, we've got international stocks, we've got commodity stocks that are starting to catch a bid. But really, when you stick along that theme of commodity stocks, you're really starting to see a lot of interest in tangible assets. For those of you who know me, I started my first business when I was 14, which was a sports card business and sports memorabilia. Sports cards, if you look at those, I can't believe some of the high graded rookies that I have over the last 2, 3 years have doubled, tripled, quadrupled in prices because people are looking for those tangible assets. And in the case of graded sports cards, there's a finite amount of, let's call it Mickey Mantle mint cards by PSA or whatever the grading system may be, that people are chasing after those to store their wealth in. So when you start thinking about this, well, what does that mean? So from an investment standpoint, you might want to start looking at, should I add some tangible assets? That could mean real estate, it could mean commodity stocks, it could mean some of these alternatives like fine wine, collectible automobiles, sports memorabilia. Those are the types of things that are going to do well in an inflationary environment. But also, if you're concerned about the dollar, it might make sense from the stock portion of your portfolio to start looking at some of these international companies that have an income stream that's diversified away from the dollar. When you think about being a historian of currencies, when you look at the long-term history of the dollar, we've been a world reserve currency now for over 100 years. It tends to be that these things go in cycles, and currencies in general, historically, 100 years is usually about where you start to see some pressure. And so I think when people are looking at that now, they're thinking, is it going to be Bitcoin? Is it going to be something else? People are starting to get a little bit concerned. And I think people need to start paying attention to this. Now, the idea here is not to be an alarmist. And also, myself, we manage hundreds of millions of dollars on a daily basis that we don't have the luxury of making these grandiose statements, right? I think that's why a lot of people come to me for advice, because I'm someone who has the finger on the pulse of real money that we're making real investment decisions with every day. So just sitting in cash and waiting, or trying to go all into Bitcoin or all into gold, is not what anyone is doing right now. But what we are doing for our clients is making some shifts, like I said, in the portfolio. Even when you think about the standpoint of debt, for example, well, if the dollar is going to be decreasing in value, if you're going to see an issue where potentially interest rates have to start rising because of the fact that inflation is becoming an issue, and that will happen. So that is an outcome of inflation. If inflation rises and the Federal Reserve cannot get their arms around that, they are going to have to increase interest rates. So what does that mean? Well, it probably means a few things. Number one, if you're looking to finance something, now is probably the time. You probably want to think about fixed financing, longer term financing versus floating rate, shorter term financing, because who knows what's going to happen in 3 to 5 years. So for those of you who are looking to buy a home, for example, I'd be a little bit concerned about a 5 year floating note, because who knows what's going to be happening at that time. Also, though, from the standpoint of, again, acquiring tangible assets, the value of that home, if the dollar decreases, could also increase. So real estate in general could be a good investment. For those of you in business, same scenario. I would look to our parent company now is locking in some longer term debt, raising debt, taking on more debt at a point in time where interest rates are low. And if you can lock that in for a long period of time, as interest rates rise, that's a good thing. So if you have money right now, long-term finance that's very cheap, as rates start to tick up, let's think about what happens there. Just look at your money market accounts, which are essentially nothing now. 5, 6, 7 years ago, you're getting 4, 5, 6%. So if you have debt locked in at one that you're able to reinvest 3, 4, 5% down the line, that's an arbitrage situation. Also, in terms of mergers and acquisitions, if you're looking to go out and acquire other companies, maybe you're a mortgage company, you want to buy some smaller brokers. Our firm, we're looking to acquire smaller independent wealth advisory firms. It's a great time to try to get some financing for that. So, in general, what we want to get across here is that inflation now is on the horizon. We don't know exactly when it's going to happen, but I think the idea of turning a blind eye to it, not paying attention, not making adjustments to it right now does not make a lot of sense. We have a couple of our analysts, chartered financial analysts here at our firm now, who are going through some really in-depth training programs on cryptocurrencies. So we'll be talking about the do's and don'ts of that over the next 3, 4, 5 months. A lot of information coming your way, but this is the time to kind of take hold of your finances, look at some of your debt. If you have some of that shorter term debt that needs to be locked in, now is probably the time to do it. If you're looking to go out and purchase a home at lower interest rates, now is probably the time to do it. In terms of investments, I wouldn't really, the opposite. Well, I'm saying take on debt for long-term investments. I would not be investing in long-term debt, meaning buying 10, 20, 30-year bonds at 2 and 3%, because what happens to the price of those assets is as interest rates rise, the value of those goes down. Makes sense, right? Because if you buy a 10-year bond paying 2% today, well, let's say a year from now, that 10-year bond, the new one's being issued are 4%. For you to sell yours, you have to sell it at a big discount for it to be attractive to somebody. So in terms of investing, think short-term debt. In terms of taking on debt, think long-term in your portfolio. Think about adding some more of the tangible assets. Think about, does it make sense to have some exposure to international economies that may be outperforming, that I could also get exposure to a different currency stream. These are just issues we really haven't had to think about for quite a while. But I think if they're not on your radar right now, you're probably going to wind up suffering down the line. So that's today's Wealth Talk. Topic is of inflation. Go back, take inventory of what you're investing in, take inventory of your balance sheet, take some actionable strategies. So if you like this information, guys, I do this every week. It's free. We're talking about the same information that we're talking about for people who have millions and millions of dollars with us. We're sharing with the public to help you become better educated investors. Make sure that you have your own finger on the pulse of your own finances. If you haven't already, subscribe to my YouTube channel down below. Click the bell. Every week you'll be notified when we put out new content. Visit my website, robluna.com. A lot of information there. Thanks for listening to this week's Wealth Talk. Have a great week.